Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right. Hey, how is everybody? My name is Mark Eitel. I host the Mr. Mortgage Show, and I can't believe they let me do this. This is so much fun. I don't know if I'm supposed to be here today, but the door was unlocked, and Dom, my producer, was manning the board, so we were ready to rock and roll. I snuck in here for another Saturday, so super happy to be with you. Hope everybody had a great week. Another interesting week in the news, however, not a huge impact on interest rates. The Dow jumped up and down and probably will for the foreseeable future with everything that's going on in Europe. But, you know, the rates are still kind of in this channel. We haven't seen any real change interest rate wise because of what's going on with Russia and Ukraine. I think the geopolitics of this are pressuring rates down, while inflation and the Federal Reserve's impending increase in interest rates soon to come are trying to push the rates upward. So we're in this channel, and I think we'll be here for a little while. So anyway, that's kind of the rate update. Not a lot to say on that, but just figured we'd get started like we always do with a state of the market, if you will. But yeah, before we dive into the show and our questions, I want to ask everybody, do you think that Marty and Wendy are ever going to make it back to Chicago? Or is Jonah going to end up helping Ruth kill Javi? And if you're scratching your head, you're probably not alone. But if you know what I'm talking about, then you know your way around the internet. And I'm super excited to announce that you can find the Mr. Mortgage Show all over the internet now. We are on all of the major podcast networks. Obviously, iHeart, but anywhere you listen to podcasts, you can now find the show. So if you miss something, or you want to connect with us during the week, or you just want to hear something a second time, or we'd love for you to share the show if you found it interesting, hit one of those podcast networks. You'll find us there. Just Google the Mr. Mortgage Show, and we'll pop up. So if you know what I'm talking about, you know your way around the internet, and you will be able to find the show. So yeah, just figured I'd throw that out there. We're excited to be just about everywhere you can find podcasts now. So had a really interesting morning yesterday. I start my mornings about 7 a.m. on my way to the office with a conference call consisting of real estate and mortgage professionals from all over North America. We've got agents in Canada, all over the U.S., and then in Mexico, actually South America as well. But the majority are U.S. agents, and everybody shares what's going on in their market, what trends they're seeing, and where they're seeing challenges that they may be coming across for their buyers and sellers. And as this show is focused on real estate and finance, I figured I'd throw in that we're not alone. We're all experiencing the same pressures in the market. Albeit different price points, but everybody's struggling with lack of inventory and upward pressure on the first-time buyer. So everybody's feeling the pinch, and I hear a lot of people saying they don't believe this can last, and they really feel like there's a shift, if not a bubble bursting in the future. And I definitely think we're in for a shift. However, in my view, I feel like it's going to be a flatter appreciation cycle. I don't think we're moving into a bubble bursting by any means. And the reason I say that is there's still way more demand on the buy side than the sell side. So, you heard me talk last week about that theme park example where you go to the gumball machine full of fish food and you drop it in the water, and there's just that big explosion of catfish or tarpon or whatever the fish is, eating the bait. As soon as you drop it in the water, there's, a bunch of turmoil and that bait's long gone. And that's what we're seeing in housing. So I heard something really interesting in the conversation, and it came from the National Real Estate Post. And 45% of the population still wants to move, and they want to move to a less expensive region, neighborhood, state, whatever it is. Their goal is to relocate, pull their equity out of their house and move on to a less expensive neighborhood and, most likely benefit from the gains of appreciation once again. But 45% of the people want to move, which just shows us that there's still quite a bit of activity sitting on the sidelines. And I found it interesting in that report, they were talking about the 5 most expensive states and the 5 least expensive states. And they were interesting to me. They may be interesting to you. I'm not sure, but I'm going to share them. The 5 most affordable states in the country at the moment, number 5 was Indiana. Number 4 was Kansas. Number 3 was West Virginia. Number 2, North Dakota. And number 1, the most affordable state in the country, was Iowa. Now, Florida's nowhere on that list. I totally understand that. But I found that interesting. And those 5 states are definitely seeing an influx of activity. The 5 least affordable states, and this surprised me that Florida wasn't on this list either, but in order, number 5 was Massachusetts. Number 4 was Idaho, which surprised me. Number 3 was Rhode Island. Number 2 was New York. And number 1, California. And I figured New York and California would be battling it out for the least affordable, states in the country. I know Miami Metro is one of the least affordable metros in the U.S. So I share all this to let everybody know that there's still a ton of demand. People are wanting to relocate. And compared to those 5 states in particular, and just about every high-cost metro in the country, Florida is still super affordable. People want to live here for lots of reasons. Just think about it. We don't have state income tax. We have relatively low property tax compared to a lot of other states. And I don't know if you've been outside yet today, but man, we have some of the best weather in the country. And I would much rather put socks on with my flip-flops a couple times a year than have to layer up and shovel snow. And I think a lot of the country feels that way too. So still a ton of demand for real estate in general, a lot of relocation demand. And as we've talked about in the past, perception is reality. So if people are selling properties in a super expensive area, cashing out a bunch of equity, Florida still seems like it's on sale. So I share all that just to encourage you not to get frustrated. Just realize there's still a ton of opportunity out there, and we're seeing it every day. We're going to talk a little bit in this show about strategies to help you sell. I know a lot of people, part of the reason we're not seeing inventory, if you will, come to the market is because people are hesitant to put their property on the market, knowing it may be difficult for them to find somewhere to move. I've talked to a lot of people in that circumstance, and there are some strategies that may help you with that. I'm going to share a couple. You heard me bring Juan onto the show last week, and Juan's one of those guys that he's just a very high-level practitioner, and he's developed some strategies to help both his clients on the buy side and the sell side. So after the show last week, I had a really good conversation with him, and we talked about some other topics, and he shared some of these strategies on the sell side that are making a difference for his sellers, encouraging them to explore the market while still protecting them. So once we get through this very first break, we'll dive into questions. But I also wanted to share a couple of those strategies. If you're one of those people who would love to capitalize on all this equity in this hot market and sell and move up or over or down or wherever you are in your cycle of ownership, you may want to move and capitalize, but you may just be hesitating because there's not a clear path to your next property, and you're wondering how to protect yourself so you're not, living in an apartment or a hotel. So we're going to dive into that. I hear those sirens rolling up behind me. So we're going to run in that first break. And keep in mind, if you have questions, give us a shout or shoot us a text to the Anytime hotline, 561-291-8569. That's 561-291-8569. Or visit Mr.Mortgage. That's www.mr.mortgage. We'll be right back after this break. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, you heard the man. And guys, help me name that guy. We still don't have a name for the awesome Mr. Mortgage announcer, so I've got to come up with something for him because that's an incredible intro every time. But anyway, you heard him say you can reach us on the Anytime hotline at 561-291-8569. That's 561-291-8569. Or visit the website, www.mr.mortgage. That's www.mr.mortgage. So, as promised, I'm going to share one of Juan's super seller tips. Actually, I might name that a segment, one of Juan's super seller tips. So we talked about that, right? You want to sell, you want to capitalize, cash out some of this equity, but where are you going to go? You don't want to be one of those buyers who's missing out deal after deal and you end up in an Airbnb or you're staying at the Hilton on the beach and there goes all your equity, right? So we were talking about this, Juan and I, and he brought up a strategy called a reverse contingency. And some of these strategies sound like catchphrases, right? But this is a tried and true strategy. I saw it first in commercial real estate. However, it makes a ton of sense. So actually, a lot of the commercial strategies are working in this environment. But anyway, not to be long-winded, what a reverse contingency is, as a seller, you can make your contract, or more specifically, your closing date, contingent upon you finding your home that you're going to move to, getting it under contract, and closing. So you can line your closing dates up. Now, typically, that would seem difficult to coordinate. However, a lot of the buyer pool right now are renting. And a renter has a lot more flexibility on when they can close and when they can move in. They may be at the end of a lease and transitioning month to month. They may be willing to break their lease, or in some cases, you can, as a buyer, structure your closing so that you don't have a mortgage payment for almost 2 entire months. So a renter has that flexibility where they may not even have to make 2 payments. So as a seller, you can put a reverse contingency into your listing, your offering, and when you accept that contract, you can specifically put into the contract language that protects you from having to close prior to you finding your next property. So they're finding it useful on the sell side to allow you to capitalize on this market as a seller, move into a more desirable property for whatever reason. As we mentioned, move up, move down, just change locations. So talk to your agent about a reverse contingency. And you hear me say it all the time. If you're not working with an agent that you're comfortable with, you don't have a rock star agent, give us a shout. I work with a ton of agents. I mean, a lot of agents, and I see some really good ones. I see some really bad ones, and I'll be happy to steer you to a rock star real estate agent who has all of these strategies, but most importantly has the knowledge and the experience to allow you to benefit from them. So a reverse contingency may allow you to step out as a seller into this market and capitalize on this high equity position that you're in and move without the risk of, being stuck without a house. So I throw that out there as an option for sellers. So consider that. If you have any questions, give us a call. 561-291-8569 rings at my office when we're not on the air. But I'll be happy to get you in touch with somebody that can help or better explain that. But yeah, thought that was interesting. Reverse contingencies for a seller in this market. So as promised, we're going to dive into some questions. I'm going to throw it over to Dom, my producer, and see what we have queued up for questions. Hey, Dom.
All right. We have Caesar from Palm Springs. Caesar said, I just bought a townhouse and my closing costs were way more than I thought. My broker explained why, but I still don't understand. Do you know why my closing costs were higher? I feel like I'm missing something.
Hey, Caesar, that's a great question. And just for clarity, everybody listening, Caesar's not a client of the Mr. Mortgage team, because if he was, he would know exactly what his closing cost numbers are. Now, I say that in jest, but honestly, a lot of people find this super confusing. So we tend to lump, there's three, I guess, let me back up. There are three categories to what we call in the industry as your cash to close. A lot of people lump all those together and call them closing costs. So in those three categories, there are a lot of variables. The most controllable variable is your down payment, which is super simple math, right? You're going to buy a property and you qualify for a 90% loan. So 10% down payment, let's say it's a $400,000 house. That's $40,000. That's super easy math. But that's only one component of what is classed as your cash to close. The other two, buckets that make up that number, that cash to close, that number that you have to wire to the closing company to actually, close the transaction, consists of closing costs, which, as we mentioned, is usually the generic term we use for all three of these buckets. But the closing costs are things like your title insurance, the title charges for closing the transaction. A closing cost could be an inspection, an appraisal cost, all of the services, if you will, that need to be enacted and completed on your behalf to legally transfer the property from you, or from the seller rather, to you, Caesar, as the buyer. So one of those is a transfer tax. When you buy property in Florida, the state charges a tax on that transfer. The state charges us a tax on everything, but there are transfer taxes that are associated with it. So that's what we would call, I guess, for lack of a better word, a hard closing cost. And there are several items in that bucket. Some, or actually most of them, can be negotiated. Some are percentages of the purchase price, like the state taxes. You can't negotiate with the tax man. We all know that. But anyway, the third category in the quote unquote closing cost, or cash to close rather, is prepaids or your escrows. So most of the time when you get a mortgage, part of that payment each month goes into an escrow account, and the lender is holding that money in escrow so you can pay, or they can pay, I guess, on your behalf. You're technically paying it, but they're doing it for you, your taxes and your insurance when it renews. So that really is your money. However, you have to seed your escrow account. So in Florida, taxes are paid in November. The escrow account has to be liquidated to pay taxes in November, because that's the biggest discount you get as a Florida taxpayer as far as real estate's concerned. So in order to get the biggest discount, the escrow account is set up to have enough money in it November 1st to pay your taxes. The second thing the escrow has to pay is your insurance. Also, too, you pay your first year's insurance in advance. So if your insurance policy is $3,000 a year on your property or $4,000, we're seeing some higher insurance rates of late. You're going to pay that first year up front. That's a prepaid. And then you're going to, depending on your loan program, you're going to either put, 2 to 4 months in escrow. So you may pay 14 to 16 months of insurance up front, and you're going to seed your escrow account with that percent, the number of months rather, for taxes that are required for November's tax bill to be paid. So that may be what happened to you, Caesar. You may have gone into this transaction knowing what your down payment percentage was going to be and probably had a decent idea of what your closing costs would be, but maybe the escrows are what got you wrapped around the axle. I'm not sure without seeing your closing statement and your original loan disclosures. I'm happy to review those for you and explain them, but just know that there are distinct differences in what we call closing costs and the overall cash to close. And cash to close, that number is comprised of the down payment, the prepaid items, which I mentioned are taxes and insurance, and your hard quote unquote closing costs. So all of that together is the number that you need to bring to the closing table to end up walking away with the keys to the property. So I hope that helps. I know a lot of people get super confused when they see a big number and we just call it closing costs and it throws them for a loop. So we'll be back on the other side of this break, and I encourage more and more questions. 561-291-8569, 561-291-8569, or as always, www.mr.mortgage. There's never a .com. Just type in mr.mortgage. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
Yes, do that. Give us a call, 561-291-8569. That's 561-291-8569. If you're shy like me and you don't want to hear your voice on the air, then just text us those questions. Dom, my producer, is manning the board and watching out for questions. And as always, hit the website, www.mr.mortgage. That's mr.mortgage.com. And there you can submit your questions through the website also. And speaking of questions, I know Dom has given me the finger. Well, no, not giving me the finger, but he's holding up his finger. He has a question for us. So take it away, Dom.
All right. We have Jim from Weston. He says, you talk about a special loan for investors. Will this loan work if it's my first rental property?
Hey, Jim. I think I know the loan you're talking about. We went into great detail about a loan product that we call a DSCR loan. And yes, to answer your question, if that's the loan you're speaking of, it does work for first-time investors. So I know a lot, and that's a great question, by the way. I know a lot of quote-unquote investor loans do prefer people that are seasoned, if you will, owning and managing property. And part of the traditional investor loan, if you will, requires the DSCR, or let me explain that, the debt service coverage ratio. And that's the amount of money over and above the expenses of the building each month or the apartment or the house versus the rent. There's a ratio there. And typically a lender wants to see there be a surplus of rent money, more so than just the expenses. So a typical DSCR, or debt service coverage ratio, is 1.25. So on $1,000 a month payment, you're going to want to have $1,250 a month income for that to be considered even. Anything short of that, the bank typically would look to you as the investor to be able to make up that difference with analyzing your income and your assets. One of the cool things that this rapidly appreciating market has brought us is a new portfolio, if you will, of non-QM DSCR loans. So there is a wonderful new program out there that allows that ratio to actually be negative, which I don't ever recommend, but you could buy a property and have a negative debt service coverage ratio. Let's use that example again. You could have a $750 a month rent against a $1,000 a month payment, and it still technically qualify for the program. Again, I don't recommend it. There's additional requirements. And I guess where it would make sense is if you were buying a property that was in need of rehab and was under rent or under market value for whatever reason, and you knew with little effort or money that you could go in there and bring the rents up so that you were positive cash flow. In that instance, it makes a lot of sense now that I think about it out loud. But typically that 1.25% ratio is what they were all looking for. Now there's a 1-to-1 ratio. So that $1,000 a month payment against $1,000 a month rent income, you're even. And the lender is not looking to you, even as a first-time investor, any farther than assets and credit score. So they want to see that you have the assets to put the money down on the property. Typically, 20%, some as low as 15%, but move into a DSCR program thinking about 20% down. And they want to see you have some reserves because you may need to get into the property and do a bit of renovation, or there might be a lag time before you're collecting rent if it's not yet occupied. And you can use a projected rent also. But that being said, to answer your question, yes, a brand new first time, if you will, investor can use a DSCR loan. And they're an amazing opportunity, especially in this market. So it's interesting because typically we don't consider buying an asset at a peak a good decision, right? You're going to watch for a dip in the stock market, and then you're going to score that Google stock you've been watching, or that Amazon. We buy on the dip, sell on the peak is, the old adage. But as we mentioned earlier in the show, there's still a ton of pressure in real estate. And more importantly, from an investor standpoint, a ton of pressure in rent increases. So we had referenced that the reporting website Zumper a couple shows ago, and the Zumper, I'm doing this from memory, but the average 3-bedroom rent in the West Palm Beach metro on Zumper was $2,855 a month, or $2,815, somewhere around there, over $2,800 a month. And this number I do remember, over 60% of the landlords that were surveyed in that report said that they plan on increasing the rent 5 to 10% upon next renewal. So don't get caught up for a moment on the appreciation and say, okay, I missed a 30% appreciation cycle, which would have been awesome, right, as a landlord to buy 2 years ago. But think about it from the opportunity to collect rent in this environment. All of these people who can't buy homes, they're renting homes. And more so now than ever before are the population of renters to owners. So if you're able to capitalize in the market as an investor, I think it's a wonderful opportunity, especially with some of these non-QM investor products. More specifically, the DSCR loan allows you a tremendous amount of flexibility as a brand new investor to go out there and take down some, buy a fourplex. How awesome would that be to buy a fourplex with a DSCR loan, put 20% down, and you're instantly a landlord with the opportunity to, increase rents steadily over the foreseeable future. So I just think, as I mention all the time, don't get caught up in the minutia. Don't get caught up in the headlines of the day. Look past that to see the opportunity, because it's out there. You can look back at Florida real estate, as far back as you can look to when the charts were first created. The charts that I look at go back to the early 70s. I don't look beyond that. I'd be showing my age, but nonetheless, there's consistent appreciation, consistent rental increases, consistent opportunity in the market as an owner in any forms, own your primary residence, but in this conversation, more specifically as a landlord. So to answer your question, yes, the DSCR loan is perfect for first-time investors, and it works by analyzing the income of the property against the expenses of the property. And as long as that ratio is 1-to-1, you're going to be okay as far as the quote-unquote cash flow analysis for the property. And when you're doing that math, do consider all of the expenses associated with the property. If you're buying a condo, throw that association fee in there. If you're buying a property, throw a maintenance number in there too, so that you're covering, if you're buying a single family property, throw a maintenance number in there. If there's a homeowners association, make sure that whole number is in there when you're calculating the DSCR ratio, because the lender is certainly going to take all of that into consideration. And also know too that insurance on an investment property may be less from the standpoint that you don't have contents to insure. You're insuring the building. So if the roof comes off and $200,000 worth of contents are damaged in a storm, that's not your responsibility as a landlord. Hopefully your tenant in that instance would have had renter's insurance to cover them. So all great things to consider. Taxes typically move faster on investment property, so consider that. Do a reasonable tax forecast with an annualized appreciation rate that makes sense, because you can't homestead an investment property to get that homestead cap. And we can go into that in another show, because a lot of people misunderstand homestead exemption versus the Homestead Act, which actually caps how fast taxes can move. And there's actually an interesting strategy when you're buying a property surrounding getting the seller to refund some money to you if they didn't adequately amortize the taxes upon closing. But we'll go into that at another show. That's another reason why you want a rock star team. I've seen people go back after closing and get checks as big as a couple $1,000s. So yes, long answer to your question. DSCR loan is a powerful tool for people seeking to be real estate investors. And yes, sir, you can use it for a first-time investor as well. So any questions on that, I encourage you to give us a shout. Again, the Anytime hotline is 561-291-8569. That's 561-291-8569. And while Dom and I are in the studio, it rings here, but that also pushes to my office during the week. So you can use that anytime. And hit us on the website, www.mr.mortgage. I'm going to keep running from the police. I hear them behind me. We'll catch you on the other side of this break.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, I am back. They still haven't caught me yet. You can hear the police siren in that song that we enter the break with each time. So Mrs. Mortgage will be happy to know that I will be home for lunch after the show today. They haven't caught me yet. So anyway, as always, you can reach us on the Anytime hotline, 561-291-8569. That's 561-291-8569, or visit the website if you prefer, www.mr.mortgage. That's Mr.Mortgage, nevereverever.com. So just to finish up a little bit on that investor question, and I think I answered it adequately that yes, the program works for first-time investors, but I just want to talk about the market for investors in general, because we talked about the opportunity that exists because rents are increasing, but there's an interesting strategy that's being widely encouraged right now, and I think it's amazing. And I've been around long enough that we didn't have all of these cool names for these strategies right when I got started, but now there's some really interesting acronyms and cool names. So there's something called the BRRRR strategy, and basically BRRRR is BRRRR. So just as it sounds, BRRRR. And what that stands for is buy, rehab, rent, refinance, and repeat. And what the BRRRR strategy encourages is, just as we were talking about, capitalizing on the market that we're in by buying rental properties. The first R is rehab. So BRRRR is buy, rehab, rent, refi, and repeat. You might not need to rehab the property. You might be able to buy a property that's in, wonderful condition, and you can rent it for a premium right out of the box. But should you need to do some rehab, that's where the refinance and repeat part of the strategy come in. So they're encouraging everyone to buy, get the property up to its highest and best use as a rental, so you're commanding the maximum rent. Get a solid tenant in there. Refinance the property because now it's producing more cash flow, theoretically. So now it's worth more. You can capitalize on the equity that you've created by making it more valuable from the sense that it's creating more cash flow. Pull some cash back out and go out and do it again. And I'm going to share a super quick story about a friend named Skip. And I'm not going to share Skip's last name because he doesn't know that I'm telling this story about him. But Skip and I knew each other a very long time ago when I first got in the business. And when I jumped in the business way back in 99, I jumped in and I was a huge fan of real estate, super excited, thought it was the most amazing thing I'd ever seen as far as opportunity. Anyway, so Skip and I were playing golf, and for the record, I'm a terrible golfer, but I'm super entertaining. And he put up with me. So we went around the links together, and we were talking about this great new opportunity, this new career I was in, real estate. And I said to Skip, I said, man, can you imagine, because he was in the position to do this, but I said to him, can you imagine if you would buy a condo a year in that building across the street from your neighborhood? I'm speaking to Skip now. There was a building across from him. and you took 15-year loans on each of those properties, and you paid those loans off in 10 years, which the cash flow from the rent would have done that. By the end of 20 years, right, assuming that he bought one a year for 10 years, so on year 10, he would have bought the last one, would have taken him 10 years to pay it off. If he bought one a year for 10 years, projecting the value, now granted, this is way back in the day, so I said, what if they're worth $100,000 each? After 10 years, you would own 10. After 20 years, they would all be paid off. And he was collecting about $1,000 a month in rent. So we golfed and had a few beers and a few laughs, and we came up with an idea that would have given him $1 million of real estate free and clear, assuming it never appreciated, and $10,000 a month in income. And he said, you know what, I'm going to do that, and I'm going to retire. Well, I lost track of Skip. He lived up in Titusville, and I connected with him probably 6 or 7 years after that initial conversation. And we were sharing war stories and the what have you been up to's, and he shared with me that he did exactly what we had talked about that particular day. But not only did he buy 10 condos across the street, and I don't know how many he bought, but he bought a bunch, more than 10. He bought 3 or 4 small 2-bedroom, 1-bath homes behind his neighborhood in the adjacent neighborhood, and did that whole scenario. He played it out as often as he could. And he was probably, I'm guessing now, early 50s, mid 50s when I caught back up with him, fully retired, a couple $1 million in real estate free and clear, and, $15,000, $20,000 in positive monthly cash flow. So there's opportunity out there. Don't let the market scare you. Certainly look at that BRRRR strategy. Shoot me an email or a text during the week. I'll send you just an outline on how that works. It's just interesting to see people that are really promoting that as a strategy and teaching it. And I can speak from experience that it works. So just to jump back into questions, I see Dom's got one loaded up for us. Hey, Dom, what do we have there?
All right, I have Brian from Stewart. Brian is asking, I haven't started looking, but I'd like to buy. Trouble is, I want to use my VA entitlement, but I hear only cash and conventional loans offers are getting approved. I don't have the 20% down for a conventional loan. Any suggestions?
His name is Brian?
Yes.
Hey, Brian. Brother, you know how I feel about the veteran community, so I'm not going to go into that. My entire company is VA certified. I believe that your entitlement is, that's it. You're entitled to it. You should use it. We should be proud to encourage you to use it. But hey, I get it. You can't change ignorance. So there are a lot of people that have the misconception that VA offer is a weak offer for whatever reason. And I'm not going to belabor that point. I learned something pretty interesting in the last few weeks about this particular subject. In the past, if I was faced with this, I would just go to battle for the vet and just explain why this is the best offer. And, we win some, we lose some. It's basically the perception on the other side, the seller, and more importantly, the seller's agent. It's not the seller's fault. They really don't know enough to know enough. But the seller's agent may have a misconception about the VA loan. Hard to close, bad appraisals, whatever. So here's what we're doing to work around that. So yes, I encourage you to use your VA loan. You don't need 20% down to qualify for a conventional. You can get a conventional loan with as little as 3% down, most often 5% down, but there's a conventional program with 3%. But what we're doing, which is helping a lot of our VA borrowers, is we're doing your VA approval, absolutely getting it done, getting your COE. We're fully ready to go with your VA approval. But we're also doing that 95 or 97% conventional approval. And then we're counseling your buyer's agent and the listing agent that you are approved either way. So let's push the VA first, right? Let's go that direction. But hey, Mr. Seller, hey, Mrs. Seller's agent, just in case Brian, was that it? I'm sorry, I keep losing your name. Just in case Brian can't qualify for VA for whatever reason, we have the conventional loan ready to go as a backup. So you, as the seller or the seller's agent, can be assured that as a VA buyer, he's not a shaky buyer. And I could go on and on and on why a VA buyer is not a shaky buyer for many, many reasons, but that's really not the point here because we're all preaching to the choir. It's the perception that the VA offer has risk associated with it to the seller. So let's just take that risk out of the equation totally. Yes, it's more work for the lender. Yes, we have to do 2 full sets of pre-approval. But guess what, guys? It's only one credit report. It's not dinging your credit a second time for us to do it. We're happy to do it. If your lender's not willing to do it for you, please give us a shout. I would love to help you, Brian. But the reality is we'll send you out there with both approvals. We'll counsel your buyer's agent to present it as such and give us the opportunity to present for you to the listing agent and just say, hey, yes, this is a veteran. This is an entitlement, and it's called an entitlement for a reason. They're entitled to use it. We should not discourage them from using it, but rest assured they are a quality buyer. And to prove that, we have a conventional approval as a backup. So we've got you covered either way. It's a 2-for-1 strategy, but Brian, we're seeing it work. And I encourage you to keep on swinging, jump in. If this is holding you back, it shouldn't. Give me a call, 561-291-8569. I'll personally talk to you and walk you through it. We'll get you approved, both VA and conventional. So we're going to jump into this break. 561-291-8569. 561-291-8569 is the Anytime hotline, or you can find me at www.mr.mortgage. We'll be back after this.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. I'm Mark Eitel, host of the Mr. Mortgage Show, and super happy to spend a little bit of your weekend, or a little bit of my weekend with you, and you're spending a bit of yours with Dom and I. So super excited to be with you. And I hope you found that interesting. I know as veterans and first-time home buyers too, using FHA, they're really getting pinched, if you will, kind of squeezed out of opportunity. So I get a little passionate about that, but we're using that 2-for-1 approval strategy, and we're seeing some success with it. So I encourage you, if you're a veteran, to definitely jump in and use these type of more aggressive strategies. Get a team around you that will advocate for you and put those techniques to work. And actually, that's a subject that I just want to touch on for a minute. You hear me all the time talk about the necessity of a good team. And we've had some examples in today's show with these questions, why a good team will make a difference, right? So I think the first gentleman who asked a question, Caesar, was curious about his closing costs. Well, I'm not knocking anybody in that transaction because honestly, I have no idea who they are or what happened or where, there was a misunderstanding. But obviously, Caesar got wrapped around the axle with the cost of the closing, and it threw him off to the point that he's reaching out to us for clarity. So having a good team can get you through from start to finish without those. I'm not saying there won't be issues, right? Even the best pilot flying you from New York to LA may experience turbulence, but I promise you, if you get into some sketchy turbulence, you definitely want the best possible pilot up there. And that's kind of how I think about this world of real estate and these transactions. And things are moving so fast that we forget that this is often your biggest financial commitment, right? Look at the prices of today. These first-time buyers are out there buying $500,000 houses. So how often have they at that point in their life pulled the trigger on a, $500,000 commitment? And you want the best team around you when you're doing that. So I encourage you, if you don't have full faith and confidence in the people around you, find a different group. And the really cool thing about real estate is it doesn't cost much more in most instances, sometimes none at all from a fee standpoint, to use the very best, because oftentimes the fees in a transaction are baked into the cake. So you could hire somebody that's a rock star that's going to get you through it unscathed for the same cost, if you will, that you're going to have somebody that might put you at jeopardy. And I'm not knocking anybody. There's a lot of great agents out there. I happen to really believe in the ones that I work with, so I'm happy to get you in touch with them if you need somebody. But, I was driving in this morning and I saw something and it just flashed to mind. And I think this is how I envision a team in real estate. And I don't know how many people watch the Tour de France. And I'm going to admit I haven't watched it in a long time. But when Lance Armstrong was going for 5, 6, and 7, and the OLN network was playing it live, we had it on in the Mr. Mortgage office, and I was watching it every day and blown away by the teamwork. And you see the team sprints, and you would see Lance in the middle with his yellow jersey on, and you would see his team around him. And one rider would be out front, and Lance would be behind him, and there would be a third rider behind Lance pushing him as the first guy was breaking the wind barrier. And the whole goal of that team was to get Lance the best opportunity to get over the finish line. And that's what the real estate transaction is. Sometimes it's me, your lender, out front doing the heavy lifting, and your agent is behind you pushing. Sometimes the agent is out front and the lender is pushing. But I assure you, all of those guys know each other, trust each other, and have trained together. And that's why they have the full faith and confidence that they're going to get that yellow jerseyed rider over the finish line. And in the real estate transaction, hey, that's you. You've got the yellow jersey on, and it's up to the team around you to get you over that finish line as quickly and as cost efficiently, and maximizing the opportunity on the other side of it for you. So I'm not going to beat that over the head anymore. Get a good team. If you don't have a good team, call me, 561-291-8569. I'd love to ride for you. You can wear the yellow jersey. I'll go out front. I'll get you real estate agents around you, title company, title attorney, inspectors, appraisers. We've been doing this a long time, and we've got an amazing network of rock stars. So get a great team. We're happy to help. That's it. You hear the sirens up behind me again. So give us a shout. 561-291-8569 is the anytime hotline. When we're not in the studio, that rings to my office, 291-8569. Or as always, www.mr.mortgage. Thanks.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages, right here on The Mr. Mortgage Show.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.more www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.